Is the market ready for another rally? Hi, this is Sheldon Pinto, and I'm going to analyze the US markets for you today. So let's all find. We'll start with the 5-minute time frame of the S&P 500 futures. And as you can see, the market did hold its ground on the 50 period moving average for most of the day, and even the previous day as well. So it seems that this is a strong trend in development, but let's look at the higher time frames to get more perspective. Now this is the S&P 500 on the daily time frame, and this is important because a lot of the long-term traders look at daily and weekly time frames to make a lot of their decisions. And as you can see, it did move down in the previous weeks, and it has touched the 50-day moving average line and then bounced back, and that's expected. That's something that I had predicted based on support and resistance levels. And now that it's consolidated and had a few days to really decide what direction the market had to take in, it then decided to move upwards. And the good thing is that it broke the 50-day moving average line and ended the day high. So that shows a sign of positivity. Usually the market would either just close to the 50-day moving average line as it did here in the previous instance, and that's a sign of market reversal. But what it did now is that it closed higher and ended the day above, which is a good sign of strength. That means the market has potential to move upwards more and would more not just like come down again like it did in the past couple weeks. Now, if you look at the weekly charts of the S&P 500 futures, you could see that the market has broken over the 20 period moving average line, and that's the yellow line that you see here. And that's a good sign. That means that the market has concluded its decline and it started to move higher. And my expectation is that the market should start trending higher and maybe make a new all-time high. Now, it's hard to predict if this rise, now this is the third week that the market's rising, is this going to continue, or there may be a possible consolidation as well sometime here in the future. So how the market reacts to this yellow 20-day moving average line is important. Like, how would it just maybe decline and consolidate around the 20-day period line, or would it then close higher? If it closes higher, that's a good sign. That means that there is more strong upward momentum, and there is a possibility that the market may then touch the 4668 mark. So if the market trends to move higher, you could start taking more buy positions and move closer towards the 4668 mark to gain a lot more profit. Now let's look at the Nasdaq futures and see how it performed today. So this is the 5-minute time frame, and as you could see, the market did hold its ground for most of the in an upward trend on the 50 period moving average line. Now it did falter around the 10 a.m. mark and again around the 3 p.m. mark, but not significantly. And this is the 5-minute time frame, so let's look at a higher time frame to get more weightage. Now if you look at the daily, you could see that the market did drop a lot more than the S&P 500, just because technology was the most affected sector in the recent decline. Now the market did consolidate similar to the S&P 500, and it's broken over the yellow, which is the 20-day moving average line. So that's a good sign. That means that the market does have upward potential. So I do feel that there is a lot more upward potential, just because the small decline that we saw was not enough to predict that this would be a much larger downside move. Now the important milestone to keep in mind is, how does the market react when it touches this doji candle that you see on the screen here? So the market may move up here and then may decide, oh, is this enough of a rise? Should we then maybe consolidate for a few candles more and then decide direction or move down? Now the market, the S&P 500 and the Nasdaq, because they've got so much of similar stocks in them, move in unison, so it won't react too differently compared to the S&P 500. So yes, it could move a percentage or more higher, but there is still potential that it would still stay in line with the S&P 500. On the weekly time frame too, the Nasdaq futures does have a lot more upward potential. That's being on the assumption that this is the downward decline is done and now the market's going to start rising higher. Now with COVID behind us and a lot of the economies opening up again, New York just announced that they would be taking away the mask mandates for businesses. That's a good sign for the opening up of the economy. And what that means is that the market would then start rallying, because the fears that we saw the huge decline was because of another wave of the pandemic where everything was shutting down. So that those fears are long behind us now. The next chart that we'll look at is the gold futures, and this is the US gold futures, just to get a perspective of the broader US market. Now, the US gold futures have been in a range bound momentum for since December, and it's really hard to really trade this kind of markets because the markets keep going up and down, and it's really hard to make good decisions and have productive trades in these markets. So my advice would be, if you are not a long-term trader in the gold market, stay away until there is some direction that comes out of the gold future markets. Next, let's pay attention to oil, because oil's making new highs day by day as we speak. So this is the 5-minute time frame for oil, and as you could see, it is on a rally. It's been holding close to its 20 period moving average, and this is on the 5-minute time frame. So let's get some more perspective on a little higher time frame, and this is the daily. Now, if you look at the daily, like the market has moved up since December or Jan of 2022, and this is one of the few markets that did rally while the entire stock market was declining, and it did peak up at 92. And now, as you could see, the markets, the oil industry started to consolidate and kind of go back down towards the closest moving average line. So do expect a few declines as well. It's still pretty high, and there is potential that the market may consolidate and hold on to whatever gains it has released in the past month or so. Now, if you look at the weekly charts for oil, as you can see, it has been peaking around the 20-day moving average line, and it touched the 50-day moving average line, and then now it's made a new high. Now, the markets don't usually keep trending in these spacious high peak areas. They will start coming down. So my advice to you is to just wait a little longer, because there is potential more declines for oil, because it's made a huge rally over the last couple months. Now let's look at the top gainers for today. So Disney did come out with their earnings, and they exceeded their earnings pretty at a good rate. So that's where we've seen a 3% hike in the stock price for Disney. But it doesn't seem to be all good news, because if you look at the daily time frame of Disney, it does seem to be trending below, not just below the 200-day moving average line, but also below the 50-day, and it's just peaking over the 20-day. So I would not say this is the best times. If you look at the 200-day moving average line on the weekly charts, it is just hovering around the 200-day moving average line. So right now, I would still advise you to not step in right now. Maybe if you're a bottom feeder and you would like to just go ahead and purchase Disney, you could, if you have a long-term perspective in mind. But I do not see like strong gains compared to the others on the list of gainers for today. Next on our list is Nvidia, that grew 6% today, and Nvidia is an exceptional stock. It's got good momentum with everything that's happening in the world right now. So it is a good stock to hold on to and purchase as well. So a good thing about Nvidia is that it also did close above the 50-day moving average line. So that shows that it is in strong momentum, but it did leave a small gap here because it had a gap up today. So time would tell if it would consolidate and fill that gap up and then move higher, just like Google did recently. So keep an eye on it. If there is a strong uptrend tomorrow, you could possibly put start building positions in Nvidia, because it does seem to have a lot of growth potential behind it. Another stock that I personally own as well, and that did significantly well today at 1.72% of a rise, was Cisco. And Cisco has been trending closer to its 200-day moving average line on the daily time frame. So it's not my favorite pick, but Cisco is a pretty good stock in terms of dividends, in terms of growth prospects with the digital world that we live in now. So if you feel this is a good pick for you, you could add it to your portfolio. Maybe start adding it slowly, not just go in and like purchase a huge lot of it. But it does seem that now that it's broken out of its range here, there could possibly be an upward trajectory in store for it. So keep an eye on it. It seems to me like a good pick to add to your portfolio. It's got good numbers fundamentally as well, so have a look at that stock. Another stock that's been doing well is Apple. Now Apple is maybe too high in its peak of upward trajectory, and the reason I say that, it is touching the 176 mark right now, and that's the reason why I decided to close at this high, because it's close to the previous high that you could see here. So if the market does tend to bring Apple higher, you would see it touch its all-time high. So there is a lot of growth potential with Apple, and with Apple coming up with a lot more of its products in the fall of 2022, that's a good sign that it would just take the stock higher with it as well. Another stock that did well today was Facebook at a 5% increase. But if you saw the recent news, the earnings of Facebook, which is Meta now, I would caution you to stay away from it because of this sharp decline. Right now, it's just people trying to end their short positions that are trying to get out of it. If you look at the weekly time frame for Facebook too, it's gone below the 200-day moving average line, and that's a dangerous sign. That means that there is more decline in store. Now, there could possibly be a chance that it may bounce back up the 200-day moving average line and head higher. But let's wait for maybe a week of increases, let it cross the 200-day moving average line, and then get in. It's better to go in a strong position than try to average out your positions because you stepped in at the wrong time. Another stock that did well today with almost a 7% gain was mRNA, and that's the Moderna vaccine corporation. So the stock, even though it did climb up a lot today, if you as you can tell, it's on a straight decline. I would caution you to stay away from this right now. If you look at the weekly chart too, it's gone below the 50 period moving average line, so that's a bad sign. And you also see the golden crossover happening here with the purple and the yellow line. So stay away. Wait till the earnings. The earnings is coming in on February 22nd. If the earning results are good, that the stock may spike up in price, but wait until then because there could also be more bad news in store for it if it's not gone down enough already. Another stock that is on my watch list is Costco, and Costco did break out of its range. It was in 4 days of range, and this is Costco on the daily time frame. As you can see, it did spike up today, and this was almost a 1.5% of a gain in its stock, and that's a good sign. So that potentially could mean it's a breakout. Wait until tomorrow and see if the market trends down in for Costco, and if it doesn't, if it moves higher, it's probably a good buy just because of the upward momentum. If you look at the weekly time frames for Costco too, you can see that it's in a strong uptrend, and it rarely ever touches the 50 period moving line because it's such a strong stock, especially when when people are looking for discounts with inflation on the rise. So it's a good stock to have in your portfolio. Again, this is just my opinion and my thoughts on these particular stocks. So with that, I hope you enjoyed this small session of going through the updates of the entire US stock market. Do let me know if I should cover any particular stock that you have on your watch list, and I'll do that in the next coming videos. So with that, stay tuned to my next upcoming videos, and I hope you have a good week ahead.